So what does it say about the precious metal right now? According to the most recent stats, there are roughly, here we go, 300,000 net long positions in gold futures held by large speculators. Garner points out that gold tends to peak at precisely those levels. The problem is that when you get too many bulls, you end up with a situation where there's no one left to buy, right? Which creates a vacuum where prices tend to collapse. For example, the all-time high net long position was around 316,000 contracts mid-2016. And that preceded a massive meltdown, gold falling from 1,380 to 1,120 as the overcrowded trade unwound itself. Brutal. Stocks really got crushed, too. Put this in these figures in perspective. Even during the 2011 metals bubble, large speculators were holding somewhere between 240,000 and 250,000 net long contracts. So we're already well beyond that level of bullishness, and Garner thinks that's very bad news for gold. She suspects that buyers are already running out of ammo. How about the monthly chart of the gold futures? Here's what you see here is a little confusing. I know we're going to go over it. It's a market that had been relatively sluggish for years. All right, we see that, right? It's kind of doing nothing until the recent run. Even this big move is minuscule compared to the gigantic gold rally we had during the financial crisis, when investors were buying precious metals hand over fist. Of course, there's a good reason for that. We don't have a financial crisis. We probably aren't even going near having a normal recession, at least not anytime soon. As Garner sees it, gold is a ceiling of resistance at 1560. If that ceiling holds, she expects prices to drift back down to the low end of the trading range with a floor of 1260 as support. Why? Well, that's because of the relative strength index, or the RSI. This key indicator has broken out above 70 for the first time since the financial crisis, suggesting that gold has gotten way overbought, meaning it's come up too far too fast. Garner points out that in most markets, reaching overbought levels is usually the beginning of the end for a rally. That said, let's say she's wrong, okay? The economy really is headed for a recession sometime next soon, or some chaos happens. Then Garner thinks it could go to 1,800. She doubts that that's going to happen. The bottom line, for months, investors have been moving their money into safe haven assets like Treasury bonds and gold. But they've now run up dramatically. And the charts, as interpreted by the always astute Carley Garner, suggest that it's time for both bond prices and gold prices to come down.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.